Stocks open sharply lower, then languish as traders digest weak global cues. Realty and industrials lead the fall, while energy shows resilience.
The government slashes windfall taxes on oil produced as well as on refined products like diesel and aviation turbine fuel, boosting the stock prices of producers like Heavyweight, ONGC and Reliance Industries.
Deepak Fertilizers gains after it unveils a demerger plan for its mining, chemicals and fertilizer businesses, while GMM Pfaudler gets drubbed after its overseas promoter initiates a sale of most of its over 30% stake.
Nava gains after it tells CNBC-TV18 it expects to receive a net $227 million from Zambia Electricity Supply Corporation, while Hindustan Foods' decision to acquire Reckitt's Himachal unit gets a thumbs up. Good afternoon. You're watching us here on Halftime Report. I'm Manglam Malu. With me, Sonal Bhutra. It's been a down day so far. In fact, the Nifty is currently trudging around that 18,300 mark. We opened lower, saw a bit of a recovery, went further lower. There was a bit of a recovery, and now we're gradually inching or meandering around that 18,300 mark. What's not doing well, however, is the mid-cap end of things. We have nearly 2,000 stocks declining for almost 1,000 stocks which are advancing. So the advance decline ratio firmly in favor of the decliners. The Nifty Bank also lower by almost 350 points, though mildly off lows as well, meandering around that 20-day moving average for the Nifty Bank itself. So we'll keep an eye out on these cues. They don't look particularly good. We're seeing some weakness for our markets, and at the same time, the PSU banks are seeing a lot of profit taking as well.
Oh yes, they are. So PSU banking names, they have been star performers, right, in last couple of trading sessions, and today they have come in for some profit taking. And across the board, there is a lot of pressure, barring the fertilizer space that continues to do well. So yes, a lot of triggers placed in there, but we'll have to see whether that rally continues or fizzles out the way we have seen in the market today as well. And with that, let's get to our first conversation today. Reliance Consumer has launched consumer packaged goods brand Independence. Independence will sell a wide range of products under several categories, including staples, processed foods, and other daily essentials such as sugar, pulses, biscuits, edible oil. To discuss the key opportunities and challenges, we are now joined by Harish Bijur, who is the brand strategy specialist at Harish Bijur Consultants, and Arvind K. Singhal, chairman at Technopack Advisors. Gentlemen, good afternoon. Thank you so much for joining us. Mr. Bijur, let me start with you first up. What do you make of this move, and how do you think Reliance will be able to enjoy this opportunity, and how far can Reliance go from here?
For me, this is a big move because this is a baby step taken by RRV. And if you really look at it, this is Reliance saying that I'm very interested in this market, which is all about edibles. It can be edibles of the liquid kind, edibles of the dry kind, because at the end of the day, the real market is in edibles. And N numbers of brands have tried to open this market up. And I think there's yet another entrant. In terms of brand names, Freedom at one end, and Independence at another. Both are oil brands, one from Germany and one from Reliance now. But this is Reliance striking the gong. Reliance telling it out loud to every player in the market. Hey guys, I'm very serious about FMCG, and I've got a brand called Independence, and I'm doing a test market in Gujarat, the mother of them all markets. And if this clicks, we are going to be very big. So I think it's a big move, a big day for Reliance Retail Ventures and Isha Ambani, of course.
Take that point. In fact, Mukesh Ambani himself says that, the Reliance retail business will become the largest segment within the group. Reliance Retail's last 4-quarter combined revenues have been a little over 2.5 lakh odd crores. So even if they get about a fraction of that from the Reliance FMCG business, they could actually, on that huge base, make it larger as well. But, Arvind, he's like Harish said that it's going to be a lot more about edibles. But edibles is not only about having a product, launching it and going to the stores, etc. Edibles requires a lot more in terms of positioning as well. Do you think Reliance will succeed in that vis-a-vis the positioning of other players, the kinds of successful players that there are in the market right now? What do you think their strategy should be?
So 2-3 comments there. Firstly, some years ago, I used to question Reliance whether they will succeed in something or not. I've gone past that stage to have any doubt in my mind. Whatever they have done, they have defied conventional wisdom. and by and large have succeeded in whatever they have endeavored to start. Staples as a business, if I use the word staples, and the categories where Reliance has got into, currently is about 150 billion US dollar opportunity in India. And in our own company, we are estimating it to be more than $300 billion by 2032, which is about 10 years from now. So the size of the pie is absolutely incredibly enticing in terms of opportunity. But however, the single biggest challenge, according to me, is not so much to do with branding and marketing in this particular instance. These are all commodities. Commodities play in terms of securing your supplies at the right price, storing them, processing them, shipping them, distributing them across India, needs very different kind of skill sets than what currently Reliance has. I'm sure they have thought about it, but that is one area they, I think, will have to make a lot of new learning. How do you play commodities market in this case as far as perishable agricultural commodities are concerned? To me, that will be the single biggest thing to look out for, not the front end, according to me, where the market opportunity is very large.
Okay. Mr. Bijurg, comment on this. According to you, what would the key opportunities and challenges be? As Mangalam mentioned and Mr. Singhal also spoke about how the supply chain really works. A lot needs to be done here. So what should Reliance Industries look out for in that case?
Absolutely right in saying that, it is a supply chain issue. Because those of us who have worked and work in possibly the FMCG market understand that penetrating this is a very different game. You can penetrate telecom differently because telecom is distributed through airwaves, and possibly the chips are all shipped physically, but then that's very B2B. Out here, it is going to every nook and cranny of every little retail outlet there is. And we are a nation of shopkeepers, very small shopkeepers. So I think the choice of picking Gujarat is absolutely correct because Gujarat boasts of some of the biggest and most vigorous brands which are at the grassroots level. I mean, Tulsi Tea is possibly a big success out of there. Neelam Ice Cream. Now, these are two brands, Tulsi Tea and Neelam Ice Cream, many of us have not heard of at all. But if you really look back at what they do in Gujarat, big stuff. So maybe Reliance has a lot of learning to take from brands such as Tulsi Tea and Neelam Ice Cream to say, how do I penetrate every nook and cranny of this market efficiently at low cost levels? How can I enter not only into the hearts of the people, but into the hearts of every single local home there is? And at the end of the day, opportunity is certainly big because we're a nation of 1.4 billion bellies and bladders. Reliance Retail Ventures is aspiring to enter into the belly category with its staples and the bladder category as well when it comes to water. So I think, how do you do it? 1.4 billion people eating 3 meals a day, and that's a lot of meals. How do you cater to these meals? That's the opportunity, that's the challenge, and that is something we need to watch as to how RRV penetrates out here.
It sounds poetic when you put it that way, Harish, but I have to ask you this thing about, the moat that Reliance has here is the fact that it has its own retail ecosystem. But the bigger challenge for them, or the bigger opportunity, so to say, whichever way you look at it, lies by beyond their own ecosystem, putting their products out in general trade. You talk about the 1.4 billion mouths and bladders, etc., but a very limited number of them have access to Reliance's own ecosystem. Most of them are still purchasers from the traditional Kirana route, etc. Do you think that will be challenging for Reliance given the shelf space, etc., that, limitations that there are, and it is a supply chain game? They'll have to probably give a lot more in terms of margins, etc.
Absolutely. A very good question, really, and a quick answer to this. Please note, this is RRV's baby steps, the first steps in the market. And this is going to be very direct to market. But then don't forget the intermediation systems they're bringing in. Remember, there is something called GeoMart out here. Remember, there's something called Geo Platforms, which is going to come. Remember that Reliance and every retail market guy understands that the retailer is losing business. He's lost business to technology. So Reliance will want to reinvent it back again and say, dear retailer, you will get your business back again. And I have intermediation systems and GeoMart and Geo Platforms and all the secrets that are behind that wall of Geo Platforms will actually blow open this market and say that the retailer is going to prosper once again.
Okay, Mr. Biju, take that point. Mr. Singhal, comment on this. What would the key risks be, and what are the challenges to the other players in the market because of this move?
So let me just, for a minute, take a small digression. We should keep it in mind that Reliance is also a very, very significant player only in B2B. Reliance Smart and now recent acquisition plans for Metro Cash and Carry actually gives them a huge advantage in terms of being able to distribute to millions of small retailers, which FMCG companies currently do not have that advantage. Yeah, so I think we should keep that part in mind as well, that they have more than one, let's say, arrow in their quiver to attack this market. As far as the challenges to other companies are concerned, I can make a very generic statement. The market today in India, as far as staples are concerned, is largely loose, unpackaged, and unbranded. So the lot of growth is actually going to happen because of the evolution of Indian consumer from unpackaged and unbranded staples to aspiring to get packaged at least, and maybe then branded as well. So headroom, both in terms of absolute consumption volumes going up as economic growth happens, consumer behavioral changes taking place, provide opportunities at this time to just about every player. Not to worry too much about competition. I'm not saying don't ignore the competitors, but competition probably will not be that big a challenge. The bigger challenge would be, in my opinion, still, how do you get the commodity part of the sourcing right? How do you get the distribution efficiencies in place? And how do you obviously compete on the basis of quality in this case, probably not so much as the price, because price will be market driven anyway.
Right.
All right, take that point. Thanks a lot, gentlemen, for joining in and giving us your insights on this. Like Mr. Bijur said, it is baby steps for Reliance right now. We will only see where this goes right now. And Arvind said that, you have to watch out for the quality of the product as well. Take a short break, come back. We'll be joined by the management of Anupam Rasayan, who joins us after a very long time, actually, to discuss their business outlook.
Welcome back. You're still tuned into Halftime Report on CNBC-TV18. The stock on our radar is Anupam Rasayan. Centrum recently initiated coverage with a reduced rating, target price of $725. But they do talk about certain triggers and levers going forward for the company as they expand into fluorination and the other capex that the company has planned as well. To discuss the outlook, we are now joined by Anand Desai, who's the MD at Anupam Rasayan, to discuss the business outlook and a lot more. Mr. Desai, good afternoon. Thanks a lot for joining us. Speaking to you after a very long time, so we do have a lot to ask you as well. Q2 results were very strong for the company. In Q2, you did mention that you continue to see an increase in volumes. Is it coming in via newer clients, or the existing clients are giving you more demand? And you also spoke about the Europe Plus One theme. What kind of benefits have you seen so far? Is it a company-specific phenomenon, or you're seeing it across the industry?
So thank you for this opportunity. And yes, it's been a long time. But yes, again, coming back to your question, I think the half year was strong. We expect the remaining part of the year also to go strong. See, Europe Plus One is playing out well. China Plus One has been in the place since some time. And as you would know, that we are competing against the other main competitors are in Europe. So, the energy crisis over there, the other cost factors which are going up over there has made us more competitive, and that is what is driving our sales, or rather our volume growth for our products. So I think that is where the growth is coming more. We have been giving guidance, so in the past of that we will be doing what we've been doing in the past, that is around 25 to 30% growth, and that is we anticipate to complete the year with that percentage. Yes.
All right, we take that point. You recently raised about 500 crores via QIP. Wanted to understand if that was for your fluorination expansion. 420 crores is the amount that you earmarked for that. And once that happens, what's the asset turnover on this investment, and what phase of fluorination cycle will you be in? So
on the QIP raise, we have been planning for this process last 1.5 years now. Even after the IPO, we started this process. And we have been in discussion with the customers, and the customers have given us an understanding that this is required from us. Based on that, we have planned two capexes. As you know, we are based in two geographies. One is in Sachin and other is in Jagadia. So we will be having two plants coming up in either of these, in both of these geographies. And that is where the main fluorination part expansion will happen. And you have to understand that even in the last 3-4 years, we have, 15% of our top line has been coming from fluorination. So this is not new, but this is further expansion on to new products based on the customer guidance that we have got from them.
Okay, and what would the asset turn be on the capex that you have spoken about?
Going forward, we expect the asset turn to be more than 1.5. Our target will be more than 1.75, but we have given a guidance of 1.5 years.
Okay, so you said 15% is already what you get from fluorination business. It's just an expansion into a newer cycle, so to say, or an upwards journey in the fluorination chain. So does that also mean better margins once you actually add more fluorination products? And how much will fluorination contribute overall to the top line once all these capex come on stream?
So, if you would consider that we currently, we are performing at 25-26% EBITDA levels. And I would prefer, as you know that we pass through our costs, so our costs to our customers are transparent, and all the global MNCs are our customers. So, at that point of time, we have to be rational, and the customer has to be happy also. And so we would prefer that we work in the same margins which we are doing currently. So we would prefer to give a guidance of between a margin of between 25 to 28% going forward on a continuous basis.
Right. In the second quarter, contribution from Europe was about 35%. India was 31%. Looking at Japan, Singapore, China, all of that would be about 20-odd%. Exports, basically close to 70% of your overall revenues. Do they come in at better margins? And because there is this concern in Europe and America, slowdown is expected, do you think there could be any sort of weakness there?
So again, you will see the business or the products which we are in, and with what applications they are going in. So major would come from agro, as you would know, and what we were mentioning. And the second is pharmaceuticals and antibacterials. So, and again, we are competing against somebody who's sitting in Europe or say in Japan, and the costs over there have gone through the roof. So we stand a better chance for expanding our existing product volume growth. And that is where we are coming from. Our customers have been giving us guidance. They are insisting us to, fulfill our volumes, which were supposed to be done for 12 months, to be done in 9 months or even 10 months. So that's a kind of potential or rather the growth which we are seeing now, especially into Europe and into the US. And again, most of the products are into agrochemicals and pharmaceuticals. So there the demand is very consistent, I would say. And so we don't anticipate any major issues from that side. Not even major, but I would say there are any issues from that side.
Mr. Desai, I just want to understand, for exports, do you have any manpower which is stationed abroad? Is that something that you do, R&D labs or any company, so to say?
So we have people in Europe. We have our major sales are into Germany and into Switzerland. So we have a representative office over there where it is staffed by 2 people. In the US also we have 2 people. And we have just recently started a company in Japan. We shall be starting a company in Japan by January end, where we are staffing 2 new people.
Yeah, Mr. Desai, I ask you that because, I've been speaking to some pharmaceutical companies as well. They spoke about how difficult it is to get scientific talent abroad when you're talking about expansion, because that is one of the most important things as well when you are developing new products. So is that something that agrochemical companies or chemical companies in general are facing as well?
I think yes, but see, you have to come from Anupam's perspective. You have to understand that we are working with the major global majors. So there are a lot of opportunities for us to tap into the network of the people who retired from these MNCs, and that has been our idea to take it forward. So so most of the people whom we have taken on board in Europe, either they were leading BSF's office and they have retired now, and then we have taken them on board. In US, it was a Corteva gentleman from Corteva who was retired and has joined Anupam Similarly, in Japan, a very senior person from FMC who is retired, he has joined Anupam. So that is a strategy which we follow to take people who have been into an MNC, and then after the retirement, we take them on board. So
Yes. No, I do get your point. I just want to confirm is that if that's something happening on ground at all and will impact industry at large. Last question before we let you go. What will your manufacturing capacity increase to once all this capex come on stream, the fluorination one and the other ones that you're planning? Currently, it's 27,157 metric tons per annum. What would it increase to?
So I would not prefer to go on the volume side because, on the multipurpose plant, those volumes change very fast. For example, a product would require 5 steps, we would need 10 steps, and then the volume shrink. But I would rather go on a value side and say that we would be able to give you 30 to 35% growth going forward from FY24 onwards. So that is something which we would be focusing on. So value growth, volume and value growth will be there. And we are slowly transiting towards a higher value price products on the fluorination side, especially. And our existing portfolio, they are also growing massively on all the LOIs which you have signed last year. They will start coming into play from next year onwards. So I think we should see, and we have been growing historically at 30% plus. That is what we would want to continue growing, go for the next 3 to 5 years, based on the last LOI signed, as well as the new capexes which will come on board by 2024. So I think 30 to 35% guidance is what we will be giving to the market. And that is what, again, I mentioned over here.
Okay. All right, Mr. Desai, it was a pleasure speaking with you. Thank you so much for joining us today and explaining to us the business plans and what's happening on ground as well. Time for a break now. Prakash Gaba will join in with some trading strategies on the other side. Stay tuned.
Welcome back. You're watching us here on Halftime Report. This is also the time where we actually take a look at the way the market pans out from the F&O standpoint. It's extremely interesting the way the market has moved all through the day. Every time there was a threat towards the lower end, we've seen a recovery. Every time the market was going higher on the recovery level, we are seeing a bit of a decline as well. And now it is in the recovery phase. So the Nifty is down just around 53 odd points. And usually the stocks that lead the recovery have been the same. This time around, the only exception is this recovery is led by all the IT stocks. So the intraday chart of Infosys comes up for you, and you see the stock are higher by almost about 1.5%. Reliance too has once again made an attempt to move higher from the lows of trade. And a bunch of these metal stocks doing well. Tata Steel, for instance, is doing well as well. The Nifty Bank is now sitting with a cut of just about 0.5%. It's bounced back off its both 20-day moving average and the 20 DEMA, which is 20-day exponential moving average. So that's extremely interesting. On the Nifty itself, we've seen a lot of writing at the 18,300 put. So that's telling you that the fact that we've meandered around that 18,300 mark, seen a fair amount of support out there. So 18,200 and 18,300 would be important support zones to watch out for. Today's low, just around that 18,250 mark, will be crucial to watch out for as well. On the way up, however, 18,500 call writers have been extremely active, as have 18,400 call writers. So the reason why 18,500 call writers have been active is because every time the market moves higher, we see a sell-off or some sort of congestion. Why is that? Because the 20-day moving average on the Nifty, which was expected to be a strong support, has broken down, and now we're below both the 20-day exponential moving average and the 20-day moving average. So as a result of which, any sort of move closer towards that 18,500 mark may see some bit of congestion. Prakash Gaba joins in with more on the technicals of the market. Prakash, we've recovered from the lows right now, curtailed our losses to just around 33 odd points. Do you think this is a flash in the pan, or is this the real thing?
Well, so far it is down. Good afternoon to you.
Yeah.
Well, Mangalam, it possibly can go up from here. And if it goes up, where does it go up to? I have a feeling it can go up to 18,450 or maybe 18,500. But we are not out of the woods as yet. Because what we saw are two kinds of pattern. One was first December pattern was an exhaustion top. And so was the case on Monday, an exhaustion top, kind of an island reversal. So we must respect that, and what we are seeing now is a down move, which is because of that exhaustion. Now, is it going up from here? Possibly it's a reaction to a down move. And if that happens, 18,450 to 500. We'll have to really see, is it crossing 18,700 to say we are out of the woods really. If that happens, then we can say, yes, back to bull market. So far, some kind of correction, a sideways move or some bearishness bias. All is not well, I can say that. Maybe a sideways move, little bearish bias. That's all.
Okay, so sideways move. Prakash, what would individual technical picks be in that case?
Yeah, I would still see, I think Balrampur Chile looks good to me, seeing a good traditional up move, trading at 399. I think it should go up to around 420 zones. Stop below 395 and Balrampur Chile should be fine. The second stock that I like is an aggressive call on Colgate. Seen a down move and a move started. Hopefully 1560 is the stop loss. On the upside, a 1600 is the possibility. So Colgate and Balrampur Chile should be looked on the long side. If the market is up, it should go up.
All right, Prakash, thank you so much for joining us. Those are the technical bets and also a check on the technicals of the markets. By the way, just take a look at Dr. Reddy's. That stock, of course, is declining. The market texture also is that way. But there has been an important update. The stock is at the day's low. Origin has stopped clinical development of AUR101 as an oral drug in psoriasis. Now, it is a wholly owned subsidiary of the company, that is Dr. Reddy's. And they say that the magnitude of efficacy improvement with OR101 in psoriasis versus placebo is not what they had hoped for. They had hoped for better outcome from this particular clinical trial that the company was undertaking, but there has not been any breakthrough, so to say. There were no safety issues, but yes, the company says they did not add any desirable benefit in moderate to severe psoriasis, so they are not going ahead with this clinical trial, and that is something that is an important update for Dr. Reddy's. Slip into a short break now. Up next, we'll get you more on markets and talk about a lot of stocks which are in focus. Stay tuned.
Welcome back. Let's talk about some individual stocks which are not doing too well. GMM Pfaudler is one of them, down more than 13% in trade today. Sources tell us that the promoter, Pfaudler, is looking to sell a sizable stake in the company, almost 30%. Abhishek joins in with the details of this story. Abhishek.
Well, Mangalam, as you mentioned, there is a block deal that is to happen in GMM Pfaudler. Now, Pfaudler, the promoter entity, is looking to sell about 29.88% equity in the company. So, quantum-wise, it's about 1.34 crore shares, and offer size is about 2,283 crore in terms of INR and about 277 million in terms of dollar. So, Axis Capital is the sole broker over there. The floor price has been set at 1,700 per share, which is a discount of around 11.7% to yesterday's closing price. So promoter holding will decline to about 26.2% from earlier level of more than 56%. Just take a look at the shareholding history of Pfaudler. It has declined massively from 50.44% that you saw in June 2020 to about 31.88% as of September 2022. And it will reduce to a little less than 2% after this block happens. Back to you.
All right, that is on GMM Pfaudler, a big mover in trade today. With that, we'll slip into a short break. We'll get you more on the markets on the other side. Stay tuned. Welcome back. Still tuned into Halftime Report on CNBC-TV18. Let's talk about some pharma companies now. Dr. Trihanam Vedanta, that is the hospital company, says Cleveland Clinic is his inspiration. Healthcare is a business with a soul, and medicine-first attitude will give good returns. Talking to Ekta Batra at his flagship hospital, Medanta Medicity in Gurugram, he points out that India is a growing hub for medical tourism, and with the country providing quality and cost-effective services, it will be higher as well. Here is a slice of that conversation.
We have, before COVID, up to about 12% of our patients were international. Then COVID, of course, with the restriction of travel and COVID itself, lockdowns and all that, that went down to about 3-4%. Now it's on its way back up. So we are one of the favored destinations because of the fact that we are a seamless institution. From the moment they connect with us, we receive them at the airport, we bring them here, we treat them, We will then see them off at the airport. So we are from that point of view, patients also find it very secure. See, one of the things, if you're coming to another country in an unknown city where, you know, there are so many vagaries at play, that it gives them huge comfort that you can give them this kind of service.
So it had fallen to around 4% of sales during COVID, and medical value tourism has probably risen to around 6%, 6 to 7% now.
Right, but maybe it's a little more even now from the time as we are talking, because the recovery is much faster. And the biggest bottleneck has been the visas. So the embassies are really now geared up to, because it was all disrupted. So now the pending visas are being issued. We have, as we speak today, over 140 visas waiting in Iraq to come.
Okay.
So, and the other thing is that, you know, the Prime Minister has announced these two schemes, no, Heal in India, Heal by India. And that also has triggered that all the services that participate, and you start from patients, recognizing or talking to the doctor, or recognizing which institution to go to, from that point to send them letters for the visa letters, from the visa to the airport, all those things are now being stitched together. So I think that India has a huge future for actually serving our countries, immediate countries and extended countries.
But what is the USP that India has vis-a-vis the other countries that are equally focused on medical value tourism?
So there are three major things you can speak of. One is that we have the highest level of care available here across all specialties. So that you cannot, if you close your eyes, and I took you to Cleveland Clinic today, and you opened your eyes there, you would not know the difference where you are. So that is one part of it. Second is the fact that the cost is much less. So they're not paying for cheap services at cheap price. They are paying for a lesser price for very high-end services, which are comparable. And the third important thing is that language is another situation, that we are more universal in English than other countries, because they have that impediment. So I think that they feel very comfortable. India has a good image, improving, I would say. And you know, things like what is happening in Delhi with the pollution and all that doesn't help. So as we move forward and try to solve these problems, I think undoubtedly India will be the premier destination of all other competing nations.
When do you expect it to probably rise back to its peak of 12%, maybe surpass it as well?
I think that past Christmas, you will see the whole surge.
Okay, so you'll probably see it back to 12%.
We're already 7-8% already, so you're seeing it as we speak. Every week it will go up a percent.
And sustain at probably 15% or higher?
Could be higher even. That's what we are aiming for, and why not? Because it is, you see, that also demonstrates the soft power of India. That, as you know, I was in the US for 20 years. So 17% of all super specialists were Indians in America, right? Out of 350 million people. Today it must be much more. If you look at NHS, 30% of the doctors who do the service are Indians. If you look at the nurses, they're all over the place. So the branding of India as a superior human capital is already established.
Okay, that was a piece from a very special series we have planned for you, Medicine Box, a deep dive into the world of pharma and healthcare. Catch snippets of this conversation all day today only on CNBC-TV18. Time for a break. On the other side, Manisha Gupta joins us with Atul Chaturvedi, who is the Executive Chairman at Sri Renuka Sugars. Stay tuned.
Welcome back, and let's talk about sugar now, where we have seen the raw sugar prices globally trade very close to those 5-year highs there, and there are various factors which seem to be supportive as well. To begin with, it is about India not producing so much raw sugar but as much of white sugar, and that is what is more lucrative, and especially after the Food Secretary statement yesterday that the companies should focus more on refined and specialty sugar production really seems to have done the trick there. Joining us then is Atul Chaturvedi. He's Executive Chairman, Sri Renuka Sugars. Mr. Chaturvedi, hi, thank you so much for joining us. First of all, how do you see the price move coming in? Sure, there were some expiries as well in the international markets yesterday, but the kind of run-up that we saw, how are you reading it?
In fact, probably the run-up day before yesterday was largely technical and sell stops got triggered. But the fact remains that the raw sugar situation in the spot market is definitely tight because Brazil doesn't seem to be having too much of sugar to sell to the world. But as far as India is concerned, all this talk of Indian production being much lower than what originally was estimated, I think it's a little too premature to start punting on that. Because our take is that our crop numbers could be more or less like last year and maybe marginally lower. That's about it. Nothing beyond that.
The Food Secretary also spoke yesterday that there is going to be no sugar export quota extension before January. I mean, the market has been talking a lot about that as well. Now, we do have a clarity that for the next 15, 20 days, a month, perhaps, we wouldn't see that number. What is the number that the government is going to be comfortable with before they come out with an extension?
As far as the government is concerned, government feels that the closing stock at the end of the year should not be lower than 6 million tons. As per our calculations, the end stock could be closer to about anywhere between 7 to 8 million tons if India still sticks to about 6 million tons of export. But I would tend to agree with the Food Secretary in the sense that it's a little premature to start talking in terms of additional quota when you have still not fulfilled the 6 million export SOP which has been given. Because our exports during the month of November have been woefully low, and December also doesn't seem to be all that great.
So what is the number right now? How much has been contracted? How much has been shipped as of now?
Frankly speaking, I don't take the numbers as far as contracting is concerned. That has to be taken with a lot of pinch of salt. We don't know what the actual contracts could be, but in terms of exports, November was a very low month. In fact, only about 3.5 lakh tons sugar got exported. And December also looks like maybe 600,000-700,000 tons or thereabouts, which means that India will necessarily have to export close to about 5 million tons of sugar in this period between January and March, which means close to about 1.5 to 2 million tons of sugar every month. That in itself is going to be a reasonable challenge.
All right. So you're saying of the 6 million ton that was allowed, not even million ton has been exported till now?
That's right.
All right.
A lot of it could also be attributed to Indian sugar season starting a bit late, and then there were defaults in the domestic market, and then people were renegotiating, things like that. But the fact remains that physically not much of sugar has actually moved over the country.
Clearly. Also, when you look at the international markets, I mean, India's story is one, a bullish one if you look at that. The other is Brazil, as you mentioned, and the other is Thailand, where we're also looking at some concerns on harvest. Europe crop also seems to be lower this time around. Europe may also need to be importing. How do you look at the international scenario?
Internationally, we feel that sugar would remain relatively friendly. We are not, in fact, but to see that the sugar would reach that 18 cents mark or things like that, we don't really see that happening. Because even in the forward month and the future months, the discount is not all that great. Which means, and Brazil, if it harvests a regular and a routine crop, and diversion to ethanol still continues at the same pace, then the availability will be regulated. So which means sugar remains relatively friendly. And sugar now has an outlet for ethanol big time even in India. So all these things should keep sugar internationally also, I would not say very bullish, but definitely friendly.
Okay. I also want to talk about the demand part of it, given as we talk about all commodities in India, because we are into a wedding season and a festival season towards the year end rather, we see the sugar demand and various other commodities demand inching up. Is that the case with sugar as well? How are you looking at the demand for this month and the next?
In fact, I feel sugar in India is actually inflation-proof. Sugar prices have been hovering around 32 to 34 rupees a kilo range, and they have not moved an inch. World may have moved anywhere, and sugar prices in the domestic market are still more or less very, very benign.
Okay, how about the demand then?
Sugar consumption in the country is definitely on the upswing. In fact, this year we are penciling in an addition of about roughly 500,000 tons to take our sugar consumption at around 27.5 million tons. And this during the COVID period had plummeted to about roughly 26 million tons. So sugar demand is reasonably strong.
Okay. Mr. Chaturvedi, Manisha, thank you so much for joining us and taking us through that discussion. I don't know where the demand is coming from, but it's Friday, so Manisha, I think that calls for a dessert for sure. All right, that's the update as far as the commodity side of things are concerned. For the markets, we have seen a substantial recovery on the Nifty. It's down just 22 points as we speak. Midcap also has recovered, but still is the one that is underperforming a lot today. We'll have to see whether we do get into that green terrain or not. For now, markets are under pressure, but a substantial recovery is seen from the lows. With that, it's a wrap on Halftime Report. Stay tuned. Business Lunch will take all the action going forward.